Welcome back, everyone, to Blockcast Podcast. Today we have an amazing guest, Charles Ducy, the CEO of dYdX Foundations. Today we'll learn what it means to be an early pioneer in the digital asset space. Charles was one of the leaders in the Ethereum ecosystem, working together with Consensys, and today he is leading dYdX, one of the leading decentralized exchanges in the world. An amazing episode. You will love it. Subscribe to the channel. My name is Anton Golub. I'm here together with my co-host, Dr. Demetrios Zamboglou. Enjoy this amazing episode with Charles.
We started with crypto assets, think of Bitcoin and Ethereum, but now users of dYdX can essentially trade Tesla, they can trade commodities, they can trade FX. And it's also difficult, it's kind of challenging. It just goes very quickly when you see the major fintechs or major banks starting to embrace this new form factor for traditional assets. So it's going to go very quickly. At dYdX, we essentially enable users to express their opinion via derivative wrapper on many different types of assets. And what I mean by that is, for example, Nasdaq or the CME, which have been announcing in the past weeks, essentially starting to open 24/7 trading for various assets, should they be crypto, futures, or the Nasdaq starting to trade securities 24/7 also. That's a gift, in my opinion, crypto is doing to the world, is by stimulating these traditional players to really upgrade the market and upgrade the liquidity, upgrade the global infrastructure we are all sharing, that are the global markets.
Maybe you can give us some of your opinions there.
When users are using a centralized exchange, think of Coinbase, Binance, or some others, essentially it's like a bank. You essentially send your money to the bank, the money belongs to the bank or the centralized exchange, and the centralized exchange will allow you to do different things, lending, trading, and different things. But technically you lost the ownership of your asset, and you put this asset under the trust of you have for this centralized exchange. What dYdX brought to the world together with Uniswap and some others is essentially a shift of paradigm where you don't have to trust anymore the infrastructure you will be using for trading, because it's basically smart contracts. So these decentralized exchanges do not have the ownership of your assets.
So Charles, welcome to the show.
Thank you for having me.
It's really
to be here.
It's really great to have you, and I'm very excited today because in the preparation for the podcast, I told you that I personally think you are one of the most versatile guests we had so far. Yeah. I think you have such a broad experience. You were involved in so many of pioneering initiatives, both in the crypto digital asset space, but broader. So I think we'll have many different topics to discuss. I hope, Demetrios, right? Yeah.
I think we were going to talk about many things. Yes. I mean, everybody will be first of all, how do you become an entrepreneur? This is a very big question for everyone.
Yeah.
Do you study it? Were you mentored? So we will see all of these things.
I come from a family of entrepreneurs.
Okay.
So everyone in my family had or has their own business. So it's kind of in the DNA, right? So I started my career building businesses for investors, and eventually I built my own business. That was back in Hong Kong. Early 2000. Eventually I sold this business, and together with the company which acquired me, we went IPO in Euronext in the Paris Stock Exchange.
Okay. So this was like in the internet boom, right? Was it a different business?
It was a different industry.
Okay.
At the time I was more into the electronic kind of industry out of Hong Kong. And after this IPO, I had some time ahead of me. The kind of an IPO'd company is very different from a startup company,
sure.
and I kind of missed the startup feeling. So I decided to essentially extend into Fintech, the early days of Fintech. So I joined 8 Securities, which was later acquired by SoFi. And we launched at the time the first robo-advisor in Asia out of Tokyo and Hong Kong. And it was very interesting to see how the regulators were kind of supportive to see this shift of traditional finance into more digital type of finance, and how the market was essentially eager to get a new experience in finance. Awesome. In that context, I was invited by the Hong Kong government to join them and essentially build a new practice. And I joined the Hong Kong government as head of Fintech within Invest Hong Kong. And the goal was to essentially accelerate and enable the traditional finance ecosystem of Hong Kong, which is an international finance hub, and making it really embrace and kind of capture the opportunity of fintech. So I built a team of more than 10 people out of Beijing, Hong Kong, London, and San Francisco, and the goal was to essentially design the fintech strategy for the Hong Kong traditional finance ecosystem, but also go and pitch different companies, should they be in payment, in blockchain, or in capital markets all around the world, to make them understand the value proposition of Hong Kong and grow. And in that context, I met Joseph Lubin, the founder of Consensys and the co-founder of Ethereum. And
can you tell us when that was? Because I think for the audience, I think like the historical, that was around 2017, 18.
Yeah, I met Joe Lubin the first time in 2016, 17.
This was
and
early
eventually
days.
I
Very
joined
early.
Consensys in 2018.
Yes.
So I built the Hong Kong office. Later, I took care of the Asia offices for Consensys. So we were building enterprise solutions. We were growing at the time MetaMask. At the time, MetaMask was only 300,000 users, and it grew to 30 plus million now. And building with central banks, CBDCs. So I started with the Hong Kong central banks. Later on, we built with the central banks of the UAE, the project mBridge. So if you're familiar with mBridge, which is this wholesale CBDC project from, I think it was in 2019, 2020 or so. And yeah, building with the team 6 different CBDC projects and really deep diving together with the regulators, together with the central banks, understanding how this technology of blockchain could essentially enable their ecosystems and new infrastructure. We worked with large traditional finance exchanges as well. And later down the road, I joined dYdX as CEO of the foundation. I really wanted to kind of deep dive into DeFi. I've been building a lot within the space of Ethereum, but I wanted to kind of explore the appchain narrative and go into a more focused topic that is crypto trading.
So thanks a lot.
So many things.
So many things. Maybe I can start. I mean, you really did amazing work throughout your career and always kind of being at the bleeding edge of technology, of innovation. Can you explain to the audience, like, how is your thought process in that context? Like if somebody comes to you and says, let's build a robo-advisor. And for many people, even today, they would say, what is a robo-advisor? So how does your mind work when you are looking for these new ideas? How do you decide what to pursue? Because also there's many things to pursue. The innovation is very broad, especially today. So can you tell us a little bit about your personality, how you approach this? How do you judge the risks also, right? When you do this kind of projects? To get to know you a little bit better, yeah?
I guess it's number one, a very strong appetite for technology. I've been a very early user of the internet, an early user of crypto as well, an early user of many things. So I like to try things. Then I like people a lot. I'm not so worried about the business. I think business goes and the market kind of give you a mark, so to say, on the quality of your work. But I know for a fact, we know for a fact that when you're working and building with others, strong teams and ambitious teams, usually you can reach your goal. So an appetite for technology, an appetite for fellow entrepreneurs and people which are curious and builders, and probably just curiosity as well, just being very grateful for the life and opportunities coming to me and thinking leaving those opportunities on the table, it's not respectful to people not having those opportunities. So you should make the best of it and try to bring some other people with the opportunity you identify. And probably an appetite for risk, even though I try to keep calibrating it. And but it's also bring some kind of adrenaline, and it brings you the energy to push the frontier a little bit on whatever topics you're working on.
You were the child that was writing code and solving mathematical equations, or you were the child in the past that was going out and playing
with the people.
Football with the people? How you say you were in the past and how this journey began? If you want to take it a little bit in the past.
I was probably a child thinking deeply, spending a lot of time in my own head.
Okay.
And
so an introvert kind of, yeah?
Not exactly introvert, but like definitely thinking.
Okay.
And a child which likes to connect with people and asking a lot of questions. And from this kind of appetite for people and curiosity, you get opportunities coming your way. So very much a people person, very much competitive probably. And also very, very curious of what can be interesting and not repeating something which has been done. Again, I I feel that when opportunities come your way, you need to be respectful to everyone surrounding you. Some people does not have the same opportunities coming their way, even though you might kind of run after those opportunities and they don't come by luck only. But it's kind of something which is close to my heart, to make sure that when I've got something coming to me, I should make something of it and not just sitting on my chair and passively surfing life.
Are you an engineer by trading? Did you study finance? What did
I study business.
Business.
Yeah. So I spend a lot of time with computers, but I'm not really a developer. Very early in my kind of tech journey, I was spending a lot of time in peer-to-peer file sharing communities. So before Bitcoin, so think of what BitTorrent became. Before BitTorrent, there was Napster, there was eDonkey 2000, LimeWire, many of these peer-to-peer networks, and I became really fascinated on how a single computer could essentially expand its life into a kind of digital organism by having networks of computers which become decentralized and organized and do peer-to-peer file sharing, and then expanding to peer-to-peer money with Bitcoin. And from there, I kind of started my journey with the technical aspect of these decentralized networks and decentralized computing, and eventually came into to meet with Bitcoin and the Bitcoin community. And I realized I was very familiar with the kind of architecture and how this technology works, but I was very much at the beginning of my journey of understanding money. I had a little bit of money in my pocket, but I was not really understanding how it works. And that's probably the kind of rabbit hole I took, understanding money, understanding economy, much more deeply than what the university taught me.
Who was the earlier Bitcoiners? Was the cyberpunks? Who was the early Bitcoin holders? I mean, when you were meeting with them in the beginning, who were these guys?
That's a very good question, and that's probably why I've been sticking with the crypto industry for a long time. Is the crypto industry is some kind of a zoo, and what I mean by that is you've got every kind of people in the crypto industry. You've got the cyberpunk, as you mentioned. You've got the technologists. You've got people coming from traditional finance and understanding that there is something happening which will kind of make their own industry evolving. So I really like the diversity of people and and the reason why those people will be in the industry. You might be in crypto for your own reasons, and you will be in crypto and staying in crypto as well for your own reasons. So everyone have his own path, and it makes the communities, the meetings, shaping and growing teams very interesting, because you've got very unique energy and everyone has his own fire, because this technology inspires them in so many different ways. So it makes it a very, very unique industry. If you are in traditional finance only, people will kind of stick within the same framework and same mold, so to say. But in crypto, you will find so many different people. So I that's probably why I'm sticking for years now with the industry.
Can you tell us what was your first touch point with crypto? So were you in Hong Kong, went to some meetup, or you met somebody on the, from your colleagues? Who did kind of first told you about crypto or Bitcoin or Ethereum? How did that journey happen? Yeah.
As I mentioned, I spent my early days when I was a student on the internet. And then from the internet, I was building websites and different things. And then I realized, okay, so there is a bunch of people using computers in a different way now. And they're building like computers community, which was the early peer-to-peer type of networks. And then within this community, some people started to speak about Bitcoin and the Bitcoin white paper. And this white paper was saying like peer-to-peer money. So peer-to-peer aspect, I was familiar with it. Money, I was thinking I knew, but I was not really knowing. And from there, it just started to evolve. It was in the early days of the community, it was not very speculative. It was very much exploratory. Like Bitcoin was small and worth nothing, and it was just a bunch of weird people somehow looking at this the same way you can look at a new innovation, thinking, hey, maybe there is something there. Then I took a break with this. I was just busy with my own life. And I came back in crypto much more actively when Ethereum came in. And what Ethereum brought to the world is essentially putting on chain and decentralizing business logics with the birth of smart contracts. Yeah. And with the birth of smart contracts, it brought a number of use cases, and the kind of spectrum of use cases you could be doing with the technology just expanded exponentially. So if you think about this, with Bitcoin, you can only send and receive.
Yeah.
That's all you can do. But suddenly, back in 2015, 16, Ethereum and Vitalik came up, and Vitalik was doing some kind of world roadshow, and he came in Hong Kong, and I joined those meetups, maybe 20 people at the beginning. But that was very interesting because I had this background in the industry and the technology, and suddenly there was this kind of capability of the technology to do much more. Having this kind of escrow smart contract, having business logic which you can encode, and it was really much pushing the kind of trustless paradigm much more further. And I noticed also at the time that the type of people in the room was also kind of starting to diversify. It was not only the cyberpunk anymore, but much more people in finance, in consulting. Like there was many different people coming from many different reasons around Ethereum. And that's where I decided to say, okay, this is where I really want to spend more time.
Awesome. Just to ask you, or maybe for the audience, you actually kind of wrote about this journey, the people that you have met in Hong Kong. Can you tell a little bit to the audience about that?
Yeah, absolutely. So when I was with the Hong Kong government as a head of Fintech,
Hong Kong Invest, Invest Hong Kong, sorry.
Invest Hong Kong, I was meeting a lot of people and shaping the ecosystem of Fintech in Hong Kong. And part of the marketing efforts my team was building was to essentially promote and kind of put under the light all these different initiatives. And the government was not really kind of supportive of me writing about specific people. So when I eventually left the government, I remember having some kind of farewell meetings with different officials. And I told one of them, you remember I talked about this book. I want to write about the champions of the blockchain industry in Hong Kong. And I think now I'm going to write this book because I'm leaving in a few weeks. And I remember this official telling me, "You're free now, Charles. Go ahead." So
Nice.
very, very quickly after switching career from the government to Consensys, I started to basically write this book, think about the book, think about what I wanted to cover. And I did not want to write about the technology because I knew the technology was moving so fast. But I wanted to kind of document the ecosystem and document what kind of people are coming into the industry and what are they building and what are the reasons why they come. So I wrote my first book on crypto called Block Kong.
Yes.
Maybe we can put a link in the description later on. Back in 2019, and I interviewed regulators, I interviewed VCs, I interviewed SBF from FTX. Wow. The founder of FTX started in Hong Kong. So I basically DM him and saying, "Hey, I'm writing this book. We should meet. I'd love to cover your story." I interview also the founder of Crypto.com, which also started in Hong Kong. And many other people, 21 entrepreneurs to be precise. And you know why I choose 21 interviews for the book. And I did the same a few years later with the ecosystem of the UAE.
Wait a second, I do not know why 21. Blackjack maybe or something?
Exactly.
Blackjack, yeah, for sure.
So yeah, it's more about documenting and trying to inspire some other people. It comes back like when you're lucky enough to have opportunities like this coming to you and you decide to work on them, my point of view is that I'm happy to share and let people also a share of the pie, right? So by documenting the journey of different people, I aim to inspire some others, being able to identify with the journey of that entrepreneur or another entrepreneur. Should it be like a pure tech type of entrepreneur, a regulator, a banker, and showing how they eventually find their way into the industry, so that hopefully some other people will think, hey, I kind of identify myself in some ways to this guy I read about in the book. Let's go. I can also pursue my dreams.
Awesome.
I think I'm buying this book for sure.
Yes.
Maybe we get it as a gift, but if we don't, we will buy it.
I'll sign it for you.
Yeah, awesome.
So from all of these characters, who made you the biggest impression? You will say.
All of them are very, very impressive. I think overall, without picking one specifically, I think for the most part, they are very first principle thinkers, extremely driven, and they are building resilience as a muscle. Because when you work in the industry, you've got up and downs. It's extremely volatile. Sometimes the industry is in fashion. Sometimes the price of the asset are growing very quickly. And some of the OGs, as we call them, are essentially building this resilience muscle. They understand how their business works. They understand that maybe the weather might change in a few months. And that's very impressive. And they will get less emotional over time when they keep growing their businesses and thinking much more like classic industries entrepreneurs, thinking like, okay, I'm responsible of my employees. I have a responsibility also as an ambassador of the industry to do the right thing. So I think the resilience as a muscle really comes from many of the interviews I've built, because many of those journeys started early, and many of those journeys have been somehow chaotic. Like every entrepreneur's life is, and that's it applies to crypto later on. But it's probably the big takeaway. Those people have a competitive mindset, but they are also the ones which are successful are really first principle thinkers and get ready to be hit in the face, to be just navigating the up and downs.
Awesome. And to ask you a little bit about the start of your digital asset journey, you joined Consensys. I would say fairly, very early on, right? And can you tell us a little bit more, how was this vibe around Ethereum, especially on the enterprise side? Because this was very early days for the corporates, for the institutions to start playing around with, or even doing serious work with smart contracts. So can you tell a little bit, like, what was your KPIs, your milestones, your goals there for Ethereum, but also for the whole digital asset ecosystem when you were talking to enterprises and institutions?
That's an interesting question. In the early days of Consensys has been extremely impactful in the world of crypto, in the world of Ethereum particularly. The early days of Ethereum and the early days of Consensys were very much focused around growing the audience and demonstrating the use cases. So part of your day was advocating for the technology itself and identifying use cases which will basically feed the flywheel and brings more and more engineers, brings more and more attention to the stack. So that's why we were kind of splitting our days between promoting and growing the product of Consensys, such as MetaMask or Infura at the infrastructure layer, but also spending time with the regulator, spending time with the banks, starting to speak about stablecoins, starting to speak about CBDCs, and making sure that the stack is understood properly and deployed the most thoughtfully possible, so that they can really have the best experience with the stack. And eventually you've seen that with JP Morgan, for example, which decided to take the Ethereum stack and kind of twist it for their use case and their environment, where they needed to have not necessarily like a global permissionless network, but a permission network with the technology of Ethereum, just a twisted version of it. Later on, the central banks also, many of them started to use the Ethereum stack, because there was this kind of pioneer works from many, including Consensys, to really explain, to show, to work open kimono in a way, like very much patient, very much transparent, very much explaining.
For the people who do not understand, can you explain what is Consensys and what is Ethereum? Because many of our audience will not understand. I think this is a little bit important.
When Ethereum came to be, led by Vitalik Buterin, the founder of Ethereum, he essentially built an early team around him, and they registered a foundation in Switzerland, in Zug, the Ethereum Foundation, to start growing the ecosystem and start growing the stack of Ethereum. From these early co-founders of Ethereum, many of them eventually decided to start their own companies, to grow the stack with the use cases and with the kind of visions they had from this open source software. So you had Joseph Lubin starting Consensys and essentially identifying that there was a lack of tooling, there was a lack of promotion to the enterprises. Some other co-founders started some other projects, like more lower in the stack of Ethereum. Cardano founder is also coming, for example, from the early days of Ethereum. The Polkadot founder came also from this early team of Ethereum. So it's very, very interesting to see how an early piece of software co-developed by a global community, but like from this small circle, and this small circle kind of expanded. So it's a little bit the same way you think of what's happening, for example, in California, when the early founders of Netscape, the early founders of Facebook or
PayPal
Google
Mafia.
or PayPal, those companies build their own use case. They built very interesting businesses and large businesses, but eventually those talents kind of spread and start some other adjacent type of companies and type of technology. And this is exactly the same which has been happening years after years around Ethereum, where you see generations of talents coming in and eventually either staying at the core or expanded and building the ecosystem around it.
So Consensys were responsible for the miners, were responsible for the infrastructure, were responsible for what?
So there was not really a responsibility. It's very much a kind of an organic growth, right? Yeah. So Joseph Lubin decided to build Consensys to essentially build some better tools for the ecosystem, which he thought were very important. So one of those tools was MetaMask. MetaMask is a crypto wallet, but in the early days when you wanted to interact with Ethereum and smart contract, it was basically with a command line on a terminal, which was really not user friendly. So improving the tools basically help to grow the audience and grow the potential and grow the number of people which can start to use the product and the technology and use the technology. There was also a lack of global infrastructure to access the Ethereum network. People could be running their own Ethereum node at the time, but it was kind of clunky and very demanding. So Joe started a company called Infura, a product within Consensys. And Infura was essentially enabling any application builder around Ethereum to stream the access to the Ethereum network and stream the broadcasting of transaction and stream the listening of the state of the network and the state of the different wallets or anything. So it was more like an organic type of building, which makes Ethereum very unique because it has this kind of non-leader driven type of technology. So it kind of reflects with many, because you don't have to follow like one founder. It's multiple type of founder, and this kind of neutrality has essentially pays off very well, because it's not, no one is really taking a decision. A little bit similar to what Bitcoin is. There is no Bitcoin CEO. There is no Ethereum CEO neither. Some people are very influential in this space, but they are not really the decision makers.
Charles, wanted to then touch upon something that you are definitely a pioneer and leader on and an expert on, and that is the concept of an ecosystem. And I always felt like in the early days, because I was a part of this growing crypto scene, but in Switzerland, I personally felt that Ethereum was the first use case where you had actually the vision behind it, that the application layer will come from an ecosystem. So you need to say, you need to have wallets, not just one. You need to have node service providers. You need to have custodians. You need to have exchanges. And I remember in the early days, something that I actually admired Joe a lot was that you had Consensys Ventures. And Consensys Ventures was, in its own initiative, was seeding a lot of these different projects, right? So how do you see in those early days as well, and maybe you can touch upon dYdX there as well, how did Ethereum manage to build this very inspiring ecosystem that today a lot of other L1s are trying to mimic, right? Can you tell us your historical perspective and your opinion, and how does then dYdX fit into the ecosystem of Ethereum?
I think it comes from very strategic thinking and very deep computer and business culture. The people building ecosystem successfully usually spend some times, probably months, putting on paper what will be needed and really drawing as a different ingredients which you should not be missing, and not thinking of the making quickly an application and making quickly some money. They are more thinking at the enabling some others. So when you want to build successfully an ecosystem, you really want to put on paper what you will need. And you mention custodians, you mention RPC providers, you mention wallets, you mention people developing the protocol itself. So the smart contract comes with more capabilities and matching the use cases. So it's really about mapping everything you need and being also patient. All of this does not work always. No. So you might think, okay, I found like a great wallet team to build a wallet, and so you want to kind of map the different components you might need, and also seed and let the market do their things. If you're more talented than me and we are working on the same topic, no one should be really deciding who is winning. There is no kingmaker. Yeah. The market will make you king. So if you're more, if you're smarter, if you're working harder than me, the market will basically kind of recognize that you have a better product because you've got more success. So it's also acknowledging this kind of free market forces in order to build something which will be meaningful. And where you see ecosystems succeeding is when the people come back always to this recipe, where you need to have the different components to have success over time. Yeah. And you need to have this kind of master cooks, which can be Joe Lubin, Vitalik, and many, many others. There is just master cooks in general, which will keep double clicking and saying, yeah, we are seeing a lot of progress. There is a lot of excitement on that side of the table, but we should not forget to build this, to keep building the strength of the smart contract capabilities, build the strength and the diversity of custodians, for example, enabling maybe new use cases, or not forgetting identity on blockchain, even though it's not a use case which have commercially any legs yet. So it just takes some time and some very strong conviction, an appetite for risk, but also when you've built this conviction over time, because either you join the ecosystem early or you've been able to identify different components and you know this is going to pay off. Then you start to basically build teams. You put on paper what you want to achieve. Some of these tasks you put for yourself in growing the ecosystem will be achieved faster than others. But the ones which are succeeding are the ones which are not forgetting that you need to have these different steps. A little bit like an entrepreneur thinking like, okay, my sales team is doing fantastic. Let's keep selling. And you're not looking at the production lines, or you're not looking at the finance, and then your company gets into trouble. So the same first principle apply. But it's probably harder in crypto because of the volatility and because sometimes of the emotion the market brings to you, the emotion of joy and satisfaction, seeing the progress being made, and sometimes also some deception phase where things are failing or things are progressing extremely slowly. So it comes back to this kind of fire you built inside yourself and this objective you want to reach eventually. Many of the core builders of Ethereum, they are not really here for building wealth. Many of them have more than enough. They have really this conviction that what they're building is enabling a lot of people, is helping to shift the paradigm in place, helping society to progress further. And they are really visionary builders. Not every one of them. Some entrepreneurs in crypto are more business people. But you need to have this good balance. Otherwise, at some point, the infrastructure will not be able to support enough the kind of entrepreneur layer which are building businesses and use cases.
Awesome.
Should we ask you what is dYdX?
Absolutely.
Give us a beautiful introduction of...
And how did you end up joining and leading dYdX? Yeah.
Absolutely. So after some time at Consensys, I was invited to join dYdX. I wanted to kind of go deeper into the use case and go deeper into DeFi. Obviously, DeFi has been a very much a confirmed use case for the world of crypto in general. And dYdX at the time was preparing to essentially expand into its own blockchain, the dYdX chain, and doubling down into the use case of crypto derivatives. So dYdX started in 2018, first on the Ethereum 1 layer, then expanding into the layer 2 with Starkware. So at some point in the history of dYdX was the most successful use case on layer 2s and really pulling the layer 2 narrative back in the days. And essentially keep building and upgrading the infrastructure of dYdX. With what the technology could be providing. And that's where we come back to the ecosystem. We come back to the very important work done by protocol developers and some others. And dYdX expanded from a crypto derivative to spot, and then expanded with the market also. Today, the users of the protocol can express their opinion and trade on commodities, on tokenized stocks. So it has really kind of contributed with some others into the kind of expansion of decentralized finance as a layer, as well as enablement for stablecoin. A lot of the early days of stablecoin was really very much around the use case of trading before becoming a payment use case. So without the likes of Uniswap or dYdX, the journey of stablecoin issuers would have probably been different.
Yeah. And Charles, to say, I mean, today, many people know about derivatives trading, about perpetuals, right? But I think when dYdX, by the way, first of all, I think it's a very cool name, because I think for all the mathematicians, or the physicists or engineers, dYdX means like derivative of y with respect to x, kind of derivative, right?
Exactly.
So, and but you were, again, the team and yourself were very early on within this perpetuals narrative. Today, it's very popular. I think the most traded instrument today in the world when it comes to digital assets are actually perpetuals, right? But again, you were very early on in that space. But maybe then to ask you, how do you see then perpetuals now evolving? Because this is a crypto native product, but you mentioned now trading commodities. Are we going to see more of trading of perpetuals on stocks, or are we going to be more trading of tokenized stocks? Mm-hmm. How do you see this dynamic evolving in the merger between crypto and traditional world? Yeah.
Let's do a bit of history first to really understand where this perpetuals product came from. Yeah. The perpetuals were essentially brought to light in Hong Kong by this famous builder in the space, RWAs and BitMEX. Yeah. So RWAs was a former banker together with two other co-founders. He decided to essentially modernize the crypto market, which at the time were only spot for the most part, and thinking that the futures market in traditional finance with dated futures contracts could basically contribute to a first leg of innovation in crypto, adding perpetuals contracts. So to explain briefly what is a perpetual contract, and in the world of derivative, you think of a future contract, and historically the future contracts are like 30 days, 60 days, 90 days. And what a perpetual contract does is essentially simplify this product. So the users can basically get an updated version of this contract on an hourly basis, and they can basically express their opinion in a much more simplified way without thinking, do I have an opinion in the next 30 days? Or do I have an opinion in the next week? Or maybe 10 days, I will be able to basically move my position and express my opinion along the way. So that's how the perpetuals came about. And I think why dYdX started to spend time on the perpetuals, it's very much because BitMEX showed to the world that in a centralized way, this perpetuals product was getting a massive amount of traction, and it was very meaningful for the users as well as for the market in terms of liquidity and as well as price discovery. But there was also a direction of the industry where you will basically find perpetuals not sitting only in centralized venue, but starting to decentralize. Mm-hmm. A little bit an expansion of the early use case of Uniswap, where the trade of spot crypto expanded from centralized spot trading to decentralized spot trading. And dYdX and the founder of dYdX, Antonio Giuliano, identifies this trend very early. And if you look factually at how the finance world works today, the derivative market is by an order of magnitude larger than the spot market when you trade equity. So there was no reason why the crypto market will not expand from the early days of spot and eventually grow following the same pattern. Sometimes we tend to think everything will be reinvented, but a lot of things are following patterns. So if you're able to read the situation today and the situation in the past, you're probably much better equipped to design and build something for the future. And this is exactly what dYdX has been doing over the years. We started with crypto assets, crypto primitive assets such as Bitcoin, Ethereum, Solana. But not what we're seeing, and this is an evolution of our ecosystem, crypto ecosystem overall, is we see more and more overlapping between the traditional assets. Think of treasuries, think of equity, think of funds. There is a multiple type of assets which used to live exclusively in centralized venue, in TradFi, and starting to expand their life and expand their impact into decentralized networks and permissionless networks. And this is exactly what dYdX has been doing. So what we are seeing now is, from the early days of the growth of the decentralized exchanges for perps, we see this market starting to really grow in an exponential way, because there are more and more assets coming in onto these rails. So it's exactly the same patterns you see, for example, for the US dollar, the dirham, which used to live only within banks and maybe starting to go into fintech. And now you've got the stablecoin, should it be for the US dollar or the dirham, which are essentially accelerating their distribution, accelerating their velocity. And that's exactly the kind of pattern you can identify with fintech, and which is, I think, growing at a much faster pace in the world of digital asset and crypto.
As you said, perps is a very, very interesting product. Very similar to CFDs, which CFDs have been out for a very long time
especially popular in Asia as well, right?
Very popular in Asia. When it comes now to all of these stable coins, do you think there is a market for all of these projects? I mean, a couple of weeks ago, Sui launched its own stable coin, correct? Is there a market for everyone to launch their own stable coin?
That's a great question. I think eventually this stablecoin business is finance, and finance is trust. So what we are seeing with stablecoin, in my views, is we are starting to see branded money, branded dollar by Circle, branded dollar by a central bank, branded dollar by a commercial bank, for example. And the trust people will put in your firm, in your brand, will probably expand into the new product they launch. So if you're like a random new stablecoin issuer and no one knows you yet, it will be a very long and painful journey to build the trust, to build the brand. So this is why it's very important to really look at the history of money, the history of finance in general, and coming back to this first kind of pillar, that finance is trust. And crypto and blockchain enables like very vivid innovation, and everyone is trying many things, but eventually the trusted builders, should it be by their ethic, by the time they've been lasting in the market, will really make the difference. This is why you see some stablecoin struggling to kind of expand, and some others growing very strongly. This is why there is a space for private money, but there is also a tremendous space for kind of government stablecoin or government-backed stablecoin or CBDCs, because my mom will trust more the government.
This was my other question. Yes.
Than me being a pioneer / adventurer, thinking, hey, maybe this guy has something. I'm gonna try. The market is built of so many different kind of behaviors.
Plus access to what they have.
Exactly. Yeah. So to come back to your questions, not all these stablecoins will be successful, and the one which have a trusted brand, build the things properly, and also think deeply about their distribution in order to enable further access, further velocity, further liquidity, will be the winners. But it's very interesting to see how these early days of private money came about with Project Libra back in 2020s from Facebook. Eventually was shut down by regulators, but a few years later, the regulators have been building CBDCs, the regulators have made their mind around CBDCs and stablecoin, and enabling like strong and respectable brands to be an extra vehicle for money, essentially. Yeah.
And Charles, talking about stablecoins, I mean, if we look across the continents, we have now a big discussion in US around the so-called Clarity Act, which it has many different goals, but I think one of the key goals is, can stablecoin issuers and crypto service providers give yield on stablecoins to the end user, right? And we have now a big discussion fight, Debate. I think that's the most correct way to say it. The banks are very much against it because it can actually draw away flows and capital or assets away or deposits away from the banks into the digital asset world. What is your thoughts there? Like, how do you think this balance happening? And do you think it's realistic that the digital asset industry provides a new product there that you can actually have your stablecoin, you can have it in your wallet, and you get a respectable yield that you cannot get with the banks.
I think we are in the journey of innovation, and innovation is not always embraced by everyone. Yeah. Innovations also bring disruption.
Yes.
So the banks have been basically making money with our money for decades, and the innovation brought by stablecoin in some use cases is to essentially embed the yield generation within money. Thinking that the dollar you have in your pocket can be at work while sitting in your pocket and not passively sitting in your pocket or sitting into your bank account. So this innovation is I think a non-brainer, but we are in the process of reorganizing a little bit finance. And the conversations happening in the US are important because the US is obviously a very big market, but we see also some other part of the world having made their mind already about what is a stablecoin. The stablecoins are live in the UAE. We see competition between different hubs. I can see that because I was working for a government and one of the leading international financial hub. This competition essentially accelerate these conversations. That's extremely healthy. And this is where the world is kind of accelerating on, where if one part of the world is doing something or kind of embracing an innovation, the other one will have to follow. Otherwise, capital will move, talents will move where there is the highest kind of embedment of technology and innovation, as well as velocity in terms of decisions and markets in general.
Mm-hmm. Another question I would like to ask, and I'm sure the audience wants to know as well, what is the difference between a centralized exchange and a decentralized exchange? If I am a user now, let's say a retail trader or a retail investor, what should I choose? I mean, both options are good, of course, but I think the future, and since you're talking about innovation, is going more on the decentralized kind of road. So maybe you can give us some of your opinions there.
So when users are using a centralized exchange, think of Coinbase, Binance, or some others. Essentially, it's like a bank. You essentially send your money to the bank. The bank the money belongs to the bank or the centralized exchange. And the centralized exchange will allow you to do different things, lending, trading, and different things. But technically, you lost the ownership of your asset, and you put this asset under the trust of you have for this centralized exchange. What dYdX brought to the world together with Uniswap and some others is essentially a shift of paradigm where you don't have to trust anymore the infrastructure you will be using for trading, because it's basically smart contracts. So these decentralized exchanges do not have the ownership of your assets. You basically park your assets within those smart contracts, and you're able to do all kind of things, but you're the only one having the keys to basically withdraw and get the ownership back. The platform will not have these capabilities. So it brings some challenges. It brings also a way to mitigate the risk. If you give your money to a centralized exchange and this centralized exchange misbehave or bankrupt, your money is gone.
Yes,
we've seen that multiple times. Mongox, FTX, the list is a very long list. If you start to use DeFi when it's properly built, you basically remain the owner of your asset and you don't expose yourself. So it's kind of creating a systematic custody of your asset when you use a service provider. And that's a very important one.
Mm-hmm. And Charles, you mentioned now here a great added value in decentralized finance, but decentralized applications, that you are the owner of your assets, which is, I think this is one of the biggest innovations that we brought into the world, actually, as an industry.
You are your own counterparty, essentially.
I don't think it's counterparty, but what I wanted to add there, actually, that it comes with different kind of challenges, and that's actually with smart contract risk, with hacks and so on. So how do you see this? Because you mentioned something amazing. We own the assets, but the other side, if something in the code is not done the right way, then there are actually consequences of that. So how do you see this, ongoing problems that we have there? And how does your organization and your protocol, how do you manage such risks, actually?
As you mentioned, starting to use decentralized finance, should it be for trading, lending, or just a simple crypto wallet, come with a lot of freedom, additional security, but it comes as well with a lot of responsibility. You are responsible of what you're doing. It's a little bit like you saying, like, I don't want to use a bank anymore. I will keep all the money at home or in my pockets. Then you have to be careful to close your door. You have to be careful to not leave your wallet on the table.
Yes.
You're not asking someone else to take care of this for you anymore. So that's also a journey we are all making. Some people are more comfortable with this yet, but I don't think it's also something ready for everyone. Yeah. So eventually this industry, I think, will evolve, and we will probably see a very large spectrum of solutions for users, where users will say, I want to have some kind of freedom, but I also want to have some kind of backup. Or I want someone to be able to basically rescue my wallet if I forgot the password or if I did something wrong. And I probably see the industry going into a more of hybrid type of distribution, where some people will be very much native and go and use the set of crypto tools on their own, and some others will say, I prefer to use this fintech company, which also give me access to decentralized finance. Some people will decide to stay in the traditional finance only. It's also take time to change people. Sometimes the technology, and I will say always, the technology goes faster than the people. Yes. Some people are early adopters and some others are like followers, and there is also a big cohort of late adopters. And that's where the kind of builders will come in different cohorts and build different type of applications. I believe strongly in the DeFi mullet. The DeFi mullet is a meme we have in the industry where it says essentially fintech in the front and crypto at the back. And I think we will essentially see a lot of that in very different type of flavors, but coming with banks starting to give you access to stablecoin, starting to tell you can start to put your stablecoin to work in different places, but facilitating the access for people. Overall, it brings more competition. Overall, it stimulates the banks. And I think many regulators have understood that it's not only about protecting the existing statu quo of some banks, but also stimulating them with what the technology is, and somehow with different parts of the world making progress at different pace. It basically kind of ripples and pull everyone else to upgrade their technology stack, upgrade their regulation, and also upgrading their local champions. Yes. And we see that in the UAE, we see that in the US happening right now. But in this process, sometimes the conversation and debate can be fairly heated.
Awesome. No, the idea that you mentioned a decentralized exchange with some centralized parts makes a lot of sense, because we've seen this example a couple of months ago that the trader pressed by accident a button, didn't see the warning, and then lost enormous amount of money. And then he went back to his management and they don't know who is the LP, to talk to the LP to give it back because it's a decentralized exchange. And imagine if that module was a little bit centralized, then it would be easier for everyone, including the career of the trader.
Absolutely. The same way some users will like to stay with their Apple phone because Apple is just working and they have no appetite into upgrading a driver, changing a few things in the settings, or looking at how this computer works always. And some others will need to have access to like the engine and go deeper into that. Some people like to live in an apartment because it's easy, you open and close the door and no question asked. Some others wants to get a garden and take care of the roof if there is a leakage, and everyone has a different type of things.
Awesome. Should we, Anton, talk a little bit about tokenization, RWAs? I know you're really into RWAs.
I heard you like RWAs quite a bit. Yeah,
I have some. I have seen it a few times. I wanted to hear your thoughts, both personally. Where do you see RWAs going? What are the interesting use cases? I think many times when I talk to people, they say, okay, but RWAs, it's so broad concept, but where is the demand? And also, how do you see dYdX offering maybe some products in that?
Absolutely. So RWAs are essentially means a real world asset. Yeah. So real world asset means it's not crypto native assets such as Bitcoin and Ethereum. It's more about bringing treasury bonds. It's more about bringing equity. It's more about bringing currencies or some other type of asset and brings them into the blockchain and crypto rails. So essentially what is happening, it's expanding the universe of things and use cases you can do with crypto, but it's also bringing the crypto benefits to these assets. If you think of traditional equities, you can only trade them 5 days a week, a few hours when the exchange is actually open. But the companies and the market runs 24/7, right? So it's bringing the benefit of crypto into the traditional world. And this is why it's getting so much momentum now. It's still very early. It's a small market, to be honest. But it's bringing very much a new wave of innovation and a new wave of users also. Thinking, oh, if I essentially can express my opinion on Tesla on Sunday, and I don't have to wait Monday morning or Monday evening when the US stock exchange opens, that's super interesting. If I can start to use my treasury bonds as a collateral for some lending activities 24/7 without having to wait for my banker to open his shops, that's also very interesting. It brings velocity to capital, and that's something the market is always super hungry for, right? So essentially, there was some kind of semi-mobile asset, equity, and many other assets, and suddenly they become hyper liquid, going 24/7 and being tradable on multiple different venues, and it basically bring some kind of composability and high velocity to these assets we know for so long. So I think the potential is really massive. It's very early days. There is only, to the best of my knowledge, about 250,000 holders of RWAs today. But we know how the curve works in crypto. It's exponential. So I would not be surprised if we end up having 5 million by the end of the year. It just goes very quickly when you see the major fintechs or major banks starting to embrace this new form factor for a traditional asset. It's going to go very quickly. At dYdX, we essentially enable users to express their opinion via a derivative wrapper on many different type of assets. We started with crypto assets, think of Bitcoin and Ethereum, but now users of dYdX can essentially trade Tesla, they can trade commodities, they can trade FX over the weekend, anytime. Wow. So that's a very interesting value proposition. It's also very interesting ways of building those products. And it's also difficult. It's kind of challenging. Some financial products are kind of ready for 24/7 trading. Some others will be still trading in the physical world a few hours a day only, right? And a few days a week only. So how do you essentially start to build an infrastructure for price feeds, for like the most accurate market pricing during this period where one part of the market is trading, the other part is not trading? It's a challenge. It's a challenge many people are building, but it's also showing that there is a demand for it, and it's also probably pulling and kind of pulling the traditional players in our space to rethink and upgrade their offering. And what I mean by that is, for example, the Nasdaq or the CME, which have been announcing in the past weeks, essentially starting to open 24/7 trading for various assets, should they be crypto, futures, or for the Nasdaq starting to trade securities 24/7 also. So that's a gift, in my opinion, crypto is doing to the world, is by stimulating these traditional players to really upgrade the market and upgrade the liquidity, upgrade the global infrastructure we are all sharing, that are the global markets.
Awesome. Demetrios, I think we covered a lot of topics, but what we didn't ask Charles is what was your journey of moving here to UAE? Can you tell us a little bit about that?
I've been living in international hubs.
Yes.
The majority of my life. I was 20 years in Hong Kong. I spent some time in other places, but I need the energy of global cities. And at some point in time, it was important for me to get closer to Europe. I'm originally from France. I have family there and people I want to be closer to. And so I wanted to kind of open a new chapter after my 20 years in Asia. And I think the UAE came very naturally. Everyone think about the low tax system here, but what I looked at first was how international is the city, how much traffic there is in the city of people coming and visit, how the logistics of this part of the world is highly efficient, and how much mind share there is. You can find some very interesting logistic hubs which have no mind share, no one is thinking of them, no one is talking about them. So it was important for me to find a good geographical location, to find a place which is also opinionated and ambitious. Hong Kong has been like that for many decades, and the UAE also have this drive. The UAE has these ambitions, and I need this energy around me. I don't see myself staying too long beside holidays in places which are nice and quiet. I need the energy, I need the people. And as you mentioned earlier, I wrote a book about the Hong Kong ecosystem. We talked earlier about how the people are essentially impacting your life for many things you want to achieve. And the UAE was really bringing all of this kind of components. So I came, I spent some weeks here first. I came again. I talked to my wife, and eventually we landed here in the UAE, in Dubai. And it has been a very interesting journey. I kind of tick the box I was expecting. There is this traffic, there is this traffic of people, there is this talents which are here, there is this fire in many people. And what I think, and the way I kind of qualify the UAE sometimes, it's kind of a mini USA. And what I mean by that is the UAE is rich of many immigrants. And everyone in the UAE is coming with their own dreams. A little bit like the American dreams some decades ago. Everyone is coming to reinvent its life or opening a new, exciting chapter for their life. And you've got this here. And for me, it's very energizing to be able to meet people. Should they be entrepreneurs, should they be restaurant owners or anything like this? And they've got this sparkle in their eyes. And this is something you cannot buy. So that's how we landed here. Right now in the UAE, it's a little bit challenging. As you know, we've got a war happening in the region. Yeah. But I was very inspired again by seeing that the resilience of the UAE is actually happening. Let me rephrase this. What I see in the UAE here, they're not reacting to the war happening right now. I see them deploying. I see the leadership here at peace. I see them having a plan which they're already kind of unfolding. Yeah. And when I look at how they react during COVID, which was a global crisis for every single country, I think the UAE in its history has been building a resilience muscle. The environment here is sometimes harsh. The summer are hot. But there is this kind of muscles and endurance of resilience which is here. And we see it just being unrolled before our eyes right now. I can tell you, we live here in the city. It's business as usual. Yes, we have something in our mind, like many people in the space and many people in the world, but we feel that many things have been prepared. And I feel that there is, we're gonna get through exactly the same trajectory the UAE went through with COVID. Very early reopening, very early showing that it has been a diversified economy. It has been an economy which was not emotional, but really planning on things. And this just makes a very big difference. And that's why we see so many people staying and building despite the challenge. When I look at the news today, I see a lot of emotion around the world. But I see drive and deployment of a plan here. And that makes me feeling comfortable and very optimistic.
Yeah. Thanks a lot, Charles, for saying that, because our audience is very international, and many times, one of the goals of Blockcast podcast is actually to bring all of these people from UAE and show them to the world. And I'm very happy how you described it with a lot of passion. I think, Demetrios, this was a very passionate speech saying the reality here on the ground, which I think I would have to say, maybe you agree with me, it's a lot less dramatic than what you read on Twitter, for instance, actually. That's kind of, and I think also this resilience muscle, how you call it, I think this is one of the key messages actually that I can say about UAE, and I think we can draw from this episode as well. I don't know, Demetrios, how you see it.
I would like to ask Charles to let us know what is the best way for people to contact you. Are you using LinkedIn? Are you a Twitter fan?
Absolutely. I think the best way to contact me, you can follow me on LinkedIn. You can also follow me on Twitter at Charles Dossi. I really invite everyone to read my latest book, Crypto, Arabian Crypto UAE, which essentially really give you an overview of who are the champions here. Yes. And we've got some fantastic stories, and this is only an early chapter of the crypto industry here in the UAE. And you can meet me at many industry conferences as well. Thanks again for having me. I really enjoyed the conversation.
Thank you so much.
Thanks very much.
Thank you.
And I hope you enjoyed the show. Today was really a blast. Thanks to Charles. No episode coming soon. Subscribe to the channel and enjoy.